Good morning. Houston's medical expansion wave and why hospitals and MOBs are creating a new CRE pipeline. Houston's no stranger to healthcare dominance and it's home to the largest medical center on the planet. But over the next 5 years, a new medical boom is unfolding far from the Texas Medical Center. Thinking Katy, Fulshear, West Houston, and Richmond. Those are experiencing one of the most aggressive hospital and medical office expansion cycles in the region's history. And the wave is reshaping commercial real estate demand, land values, retail absorption, and professional service corridors. Investors who understand the pattern early are positioning themselves for outsized returns. Now, the new healthcare triangle, think Houston Methodist West, Texas Children's, and Fulshear's emerging care hub. So, Houston Methodist West, it's a full campus expansion in Katy. So Houston Methodist West continues to build around its I-10 campus, and it's adding new patient towers, expanded surgical capacities, as well as more outpatient and specialty care services. And there's also going to be supporting MOB medical office building clusters along Park Row and Kingsland and the medical district spine. Now, this expansion is driving higher demand for medical office buildings within 1 to 3 miles and increased land absorption along West Green, Fry Road, and Park Row, and new mixed-use and retail centers servicing the hospital workforce and families will be needed. Industrial owners near the campus, especially along Merchants Way and Park Row, are already seeing rising valuations due to spillover demand. So Texas Children's Hospital, their West Campus growth continues. Texas Children's West Campus is really doubling down. And what they're doubling down on is pediatric surgical centers, behavioral health and outpatient clinics, urgent care expansions, and new parking and support facilities. And why investors care? Well, pediatric campuses generate some of the highest performing medical office demand in the market. So think specialists like an orthopedic surgeon, an ENT, imaging, therapy, all cluster tightly around pediatric anchors. So land near Barker Cypress or Bridgepoint and Greenhouse Road continues appreciating faster than the broader submarket. And number 3 is the Fulshear surge, the next major healthcare hub. So Fulshear has grown over 1,000% in population over the last decade, and healthcare providers are rushing to keep up. And here are some of the key developments in Fulshear. Well, there's a planned comprehensive care center announced at FM 1093 and FM 1463. There'll be specialty clinics and urgent care operators signing space ahead of rooftops. And retail centers are pre-leasing to medical tenants instead of restaurants. So what this means for commercial real estate investors is that MOB, medical office building cap rates, in Fulshear are compressing fastest in the West Houston corridor. And developers are assembling land for future 2-story medical campuses. There will also be build-to-suit opportunities for dentists, surgeons, physical therapists, as well as imaging and primary care, and all of them are accelerating. And medical tenants are now the anchor strategy for many suburban retail centers because they stay longer, they're willing to pay premium rents, and they survive economic cycles. So why medical commercial real estate is becoming a core investment strategy in 26 to 2030. Well, first being is healthcare is recession resistant. Medical tenants don't go out of style, and even during down cycles, hospitals and physicians expand where people move. And number 2, land near hospitals appreciate faster. So West Houston's corridors with hospital anchors have historically outpaced the broader market by 12 to 18% annually. And this is particularly true near I-10 West. So think of Methodist West and the Texas Children's Hospital near the Grand Parkway. So you see retail and MOB clustering around there, but also FM 1463 in Fulshear. And 3 is a retail to medical conversion trend. So as traditional retailers are struggling, medical users are quickly backfilling spaces such as former restaurant buildings, Also, flex industrial spaces that need conversion, or second generation retail inline suites. Now, this creates new opportunities for value add investors. Number four is developers are prioritizing medical anchors. So, why developers prefer medical tenants? Well, they have lower turnover, they usually have a little higher credit quality, there's good triple net lease potential, but really it's about the long term stability. Medical office vacancy in West Houston remains one of the lowest in the region. So, where the next pipeline is forming? Well, look for rapid commercial real estate growth along FM 1463, First Fulshear's new medical corridor, all the way up to FM 1093 and West Park Tollway extension. And you'll probably see some build to suit as well as medical office building land. Grand Parkway 99 has retail and medical clustered all over it, and Kingsland Boulevard and Park Row have hospital support services, whereas Brookshire has affordable land near the population boom. And these areas will define the next wave of medical commercial real estate expansion. So here's the investor takeaway. Houston's medical surge isn't just a healthcare story, it's a commercial real estate opportunity. And hospital expansions and MOB development are creating new land demand, stronger retail absorption, increasing investor migration, and more stable cap rate environments, not to mention long-term tenant pipelines. So for investors, developers, and owner users, the next decade of Houston commercial real estate growth will be medical driven, especially in Katy and Fulshear. And that's it for the day. You can visit my website at houstonrealestatebrokerage.com to schedule a consultation or for some free resources. Have a good day.